Hi friends, Simit here from InformedTrades.com. Today is July 15th, 2014. Time for our daily Forex chart review. Basically in these sessions each day I share the trades I'm placing, adjustments to existing positions that I put on in the markets. All as part of helping traders learn. You can learn from my successes, learn from my mistakes. If any of the terminology or information I'm using is unfamiliar to you, you want a deeper explanation, you want to share your knowledge, ask questions, or share what you've learned, check out InformedTrades.com, a learning community. A large archive of educational videos presented in structured format. Check it out, contribute. We can all learn together. Let's get started with a look at the charts. As is customary, we start with a look at gold. Okay, so huge down day yesterday in gold. Just as we had broken out of the range, I thought that was pretty exciting. Well, we're back in the range. Not only are we back in the range, but we closed below the 200 exponential moving average. So that's where we still are, and I'll extend this rectangle further. Set it up a little bit. There we go. Okay. So yeah, this is where we are. We are below the 200 exponential moving average. Today's candle looks a bit like a doji. So you know, some indecision in the marketplace now at the 200 exponential moving average. I do think the bulls really need to rebound from here. If they don't, the next stop, you know, should be 1280. So 1310, you know, 1313 maybe we could say, and 1280 is the range I would consider in gold. If we can clear 1310, then the next stop puts us back at the highs here, 1340. So we'll see. We are at a major support level. Some may want to enter. You know, I'm accumulating long term. In terms of a short term technical trading opportunity, I don't know. I think we're sort of in the middle of a range, and it's not a clear trend. So in terms of short-term trading, I don't really think there's much in this setup, at least on the daily chart, from my perspective. Longer term, though, highs, so I'm happy to accumulate here with the willingness to hold for several years. Here's Bitcoin. We are still above the 50 simple moving average, so that's favorable for the bulls. And that's we are right at the 50 simple moving average. The main thing I'm looking at is to make sure that this point, level C on the chart, which is right at about 600, does not get breached. So long as 600 doesn't get breached, I think you have a case that that for the momentum case, you know, that 680 is a reasonable target, and I expect price to reach that level, the next resistance level, which goes back to actually quite some time. It goes back to March of this year, and was reestablished again in June. So let's see if we can get there. We are. I would expect to move to come pretty soon. Yesterday was a very tight day, and we are right at the 50 simple moving average. So this is an example, or could be an example of consolidation before the breakout. That's gold and Bitcoin. Both of those are longer-term positions for me. Bitcoin a bit like a speculative lottery ticket. Gold a longer-term hedge against the big picture fundamentals in the global economy. Now on to my short-term Forex trading. Okay, so let's recap what's happened. Just one second while I pull up my trading account. Okay. One is overnight I had a Aussie Swiss, which is actually not here. Let's quickly go to Aussie Swiss. Oh, not here. Here. Yeah, this position I had moved my stop to break even, and it got hit. And I thought about entering this. I thought about entering Aussie Swiss, but I thought there were better opportunities in the market. Namely, I put on a Canada Swiss position, which we'll get to in a moment. So that's Aussie Swiss. And this one, just deleting what I'm, there we go. Okay, so yeah, now in terms of the position, my Aussie Swiss position got stopped out at break even. My pound Swiss position, that went really well. Huge up move. I don't know what caused this. Maybe there was some news announcement or something. So this is really nice. This is comforting. Not out of the woods yet, though. The position is still open. This is a bullish engulfing candle, so that's definitely what I expected, or was, I wouldn't say I expected the pattern, but I did think that the technical setup favored a big move to the upside, which is what we got. I will probably be able to de-risk the trade. You see this orange line, which is based on this resistance level established in June. I'll probably move my stop from here to here, so that will de-risk the trade. Long pound Swiss here. Something I rarely do, or I'm more careful about when I do it, is to take a position that's a bit the opposite. So I'm long pound Swiss, and here I'm short pound Canada, which means my net position is one of being long Canada Swiss. Okay, so this is this position is currently it just got filled and it's slightly out of the money. Yeah, it is slightly out of the money. Just got filled, so we'll see. I still like the technical setup. It was a pullback to a major resistance level, 61.8 Fibonacci retracement. Still like the setup. We'll see. It's slightly out of the money. Not much I can do for the time being on that, though I'm happy to hold. I still think the technical setup's valid. That's my two positions, pound Canada, pound Swiss. I also have a couple orders. One is pound yen. Now this was the other reason where I wanted that short pound Canada position, is that I have two long pound orders and one short pound order. So I don't want more than two trades in the same direction on the same currency. So the pound Canada is justified because I'm short the pound there. At least that's my risk diversification approach, one of my rules. Pound yen, this would have been fantastic. I was set to go long here. Unfortunately, my order did not get filled. So you see it just missed. Oh, that's really unfortunate because it would have been a great move up if it had gotten filled. But it didn't. Close doesn't cut it. So this position's still on, but actually I'm going to go ahead and cancel it. So I'll close out this order. Didn't get filled, but really the time has sort of come and gone on this one. We'll see if it pulls back. I may try again, but it doesn't look too good. That was the move I was looking to get in on, and the market just didn't come back enough to give me that. That's okay though. I wouldn't really change the entry order. Let's just take another look at it just to be clear. I think this is the correct level. 173.15. Maybe you could maybe you could argue that it should have been placed here, in which case it would have gotten filled. 173.32. So that's something to consider. You could might even argue that it should be up here. 173.38. Well, definitely something to think about. That has been an ongoing issue with me of not getting filled on these types of orders. So I'll think more about that. Definitely, I think if I had moved it to 173.38, I think that still would have been valid. Maybe in this instance, I was holding out too much for just the right order. Didn't really get it, but we live and learn. I didn't lose any money on pound yen, so that's that's a silver lining, I suppose, or a way of looking at it optimistically. In any event, I've canceled this order. We'll see. There's what else is out there in the market, and maybe there'll be another setup at another point in time. Canada Swiss. Now this setup is one I put on today, and I already have an implicit or a synthetic Canada Swiss position, given that I am short pound Swiss, long pound Swiss and short pound Canada, which basically implies a long Canada Swiss position. This time I put the order on directly, and let's see if this entry order gets filled. Tight stop here. We are going long at 82.90. My stop is at 82.68, so risking just 22 pips. Target profits at 85. So that is, we're looking to gain 210 while risking 22. So this is a 9.5 to 1 reward risk. These are the kind of setups that I think are huge. You have one of these in a year, and it can do quite a bit. Or you get a few of these in a year, and that's really the kind of setup that I think is great. Now, something that I most likely will do is probably if we can reach 84.16, I'll take half off. So now that may be a mistake, or that may be a risk-averse approach. Certainly, I can understand the rationale for trying to hold the entire position at 85. I think it's better to, excuse me, to get some at 85. As a general rule of thumb, if I can take partial profit at a reward risk of 3 to 1, where I'm the prices I can gain 3 times as many pips as I risked. I'll take that. I'll take half off there, and then I'll hold the remaining half for the rest. So that's sort of my plan. I'll de-risk the trade at 83, 86 if it goes in my favor. We'll see. Let's take a look at the 4-hour chart. You can see a little more clearly here. Here's a trade opportunity. One could argue, and this is on the hindsight or in the wake of my missed pound yen trade, that maybe I should enter here, 83.03. But we'll see. I think 82.90 is also appropriate. I think that's a stronger resistance level. That's more apparent on the daily chart. So that's definitely a greater interest of mine. And that's about it. I have this trade documented on my blog on InformedTrades.com. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.